Well, that's right, because we saw that last year, right? By February 11th last year, we were down 10%, and by the end of the year, we were up 13%, right? Well, that's what we gained last year. The S&P 500 climbed 9.5%. The NASDAQ Composite rose 7.5%. Small cap stocks, that's the Russell 2000, surged 19.5%, and let's throw the transports in there, because they were up about 20% as well. Joining us with his take now on the market outlook for 2017, GKFX, James Hughes, Chief Market Analyst there. So, James, you sounded a little cautious in our last conversation, but earnings are to be good. That's what we've been seeing so far, looking a little better. We've got a big jobs number coming out on Friday. Your thoughts about the weeks ahead and the year ahead?
Yeah, well, I think, firstly, you'd be cautious if you lived in post-Brexit Britain at the moment, and that's all we can be at the moment. But I think looking elsewhere, I think we do have to look at this inauguration speech as the big one this month. And usually anything political, an inauguration speech from a new president, it wouldn't really give us too much to go on in terms of from a market point of view. But as we say, a Donald Trump inauguration speech isn't the same as any other politician. So that could give us a lot of big movements in terms of the markets and could give us that extra shot in the arm. But as you say, I am just that little bit cautious that as soon as we hit 20,000, and I see that being sooner rather than later, we could turn around from there because the selling pressure is going to be big after that for me.
You say that European markets are closely watching U.S. markets and our political climate. What else are you looking at? Well,
from a European point of view, we have to look towards what the ECB are doing. That's been a big one. Of course, we had a pretty big meeting from them in December, very much like we did from the Fed, where there was a lot of information given about going forward. But I think from a European point of view, we all are focused on Brexit, and the plan to go through Brexit and evoke this Article 50, which would make the UK leave the EU at the end of March, is still ongoing. We still don't know anything about the plans. We still don't have any information about anything. And unfortunately, the worrying point is it seems that the Prime Minister here in the UK doesn't know much about the plan for when the UK exits the EU either. So I think we're just a little bit worried that we don't have too much in the way of information. That uncertainty really is going to be a big catalyst for these markets, whichever way they go.
And that'll be a global story, I'm sure of that. What sectors do you think that you'll probably invest in or advise people to invest in the beginning, before Article 50 is invoked, at least for the near term? Financials?
Well, I think it's, healthcare is always, maybe not necessarily financials. Italy is causing a lot of issues at the moment and is going to continue to cause a lot of issues. But I think you just have to look along to those safer ones. Healthcare is always one to look out for.
All right. James Hughes, Chief Market Analyst at GKFX. Thank you for joining us. Thanks.
Thanks, James.